Hi everyone, this is Terry with Futures.io, and it is my pleasure to welcome back FuturesTrader71 for today's webinar, Success Requires Accountability. During the webinar, please feel free to type your questions into the questions box, and we'll do our best to answer them at the end of the event. If you're watching this on YouTube, please do us a favor and give us a thumbs up if you enjoy the webinar. And as always, please feel free to share, comment, and subscribe to our channel. It really helps us a lot. For trading news, events, and information, follow us on Facebook, YouTube, and Twitter using @FuturesIO. And now, without further delay, I will hand it over to FT71, and you should get the pop-up to share your screen.
Okay. All right. There we go. Okay, let's see if you got the screen. Looks like you have it.
Yep, looking good.
Very cool. Good afternoon, everyone. So Mike from Futures.io reached out a couple months ago and said, you know, accountability is not something that it's been covered a lot, that many people have talked about, but he and I both know it's a big part of trading. And so this is what this is about. So the purpose of this discussion is to bring you back. You know, there's a lot out there in terms of technical information, what, you know, blue dot, green dot, red dot system works or doesn't. So this is not about that. As you may have already gained the experience or are gaining experience, you'll realize that the biggest part of trading really is the preparation, is the mental game. I'm sure you've heard that. So that's what we're covering today. I'm going to keep this as brief as I can, and I'm going to just ram through it. It'd be great to ask the question as it pops up, because it leaves me in context of what I just said, and I'm able to explain it a little bit better rather than waiting till the end to ask about something that was, you know, 6 slides ago. But there's a lot of information in here, so hang tight. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. So let's start out. Let's start with the fundamental point that we build on here. What is your purpose in trading, right? So if you have not defined what it is you're doing as far as trading, you know, maybe you saw a buddy or a friend or someone that you know who trades, and you thought, I'll just get in there. Make sure you take a moment, especially since it's the beginning of the year, make sure you take a moment to define what your purpose is. Your purpose is going to help you stay focused. It's like having a strategic plan or a business plan. It helps you focus on what your effort should go towards. So yes, this question is very cliche, but it's not one to be ignored. I mean, I could probably stomp a good half of the folks listening right now by saying, gun to your head, what is your purpose in trading? Well, to make money. Fine, if that's your purpose, but it needs to be more granular. It needs to be more better defined than that. So this helps you stay focused on a bigger picture, and directs your effort on a day-to-day basis. So which one of these is your purpose? Is this a hobby? You've got time, you've got money to burn through, and rather than going to Vegas or Monaco, you're just kind of gambling and trying things out, and it doesn't bother you. That's great. If that's your purpose, that's your purpose. There's nothing wrong with that. Is this something that that addresses a desire that you have to overcome things? Maybe you're a pusher and you found this to be challenging, and you have set out to overcome the difficulty of trading with a carrot on the end, and that if you do overcome it, it could be very, very lucrative, very financially rewarding. Is that your purpose? Or are you simply enticed by how easily others, especially on Twitter and other places, how easily they're making money? You know, everybody seems to be making money when they comment. So maybe that's what's pulling you in. If that's your purpose, that's your purpose. Now, why is this useful? Again, this dictates your day-to-day interaction when you go to trade, and what your purpose is. So please take a moment. It is only the 11th of the new year. Take a moment now to define what your purpose is and what you're doing, and to set out to create some goals, okay? So I'm going to share with you here something I've not shared with anyone outside of my prop group. So lucky you, right? So we're going to talk about gains. This is ultimately how we get rewarded for our effort, regardless of our purpose. We look for gains in our trading account. Things to know about gains and how they show up: they're never linear. It's almost impossible to get a linear 45-degree equity growth line on your day-to-day P&L. So don't expect it. Don't be, don't sit there and look at your P&L at the end of today and say, whoa, I made $200. So $200 times 5 days a week times 52 weeks. This is what I should expect to make by the end of the year. You should not be projecting the days or weeks profits into next month or next year. Your projected gain that serves the purpose that you're here for should be independent of what's happening on a day-to-day basis or even on a week-to-week basis. It's really an average at the end of the month. Expect setbacks all the time. There are going to be a lot of setbacks, a lot of frustration, and many failures. This is just part of the process. It's hard to learn without failing. You can learn without failing, but in my experience, I'm not that old, but in my experience, if you don't fail early, you'll fail much bigger later. It's better to make your mistakes, make them small, and make them early. So don't be afraid to just dive in once you have a plan, and to make those mistakes and expect to have setbacks. And always go back to your purpose, that first slide, right? So always go back to why you're there, so that during times when you're experiencing frustrations and setbacks, you still stay focused on your purpose. So I want to show you this. Keep this between us. This is a spreadsheet from way back. I pulled it out of my archive. This is my trading performance, my first year trading futures. This was back in 2002. So I traded equities as a scalper, as a SOS bandit, as many of you already know. I've never shared the sheet before. But this goes through 2002 when I switched to trading futures, and this is how I tracked things. This is my daily kind of accounting of what I was doing. Okay, this is one way that kept me accountable. So you see that I'm most active in the DAX, as I've always said in my webinars. I also traded the Bund and others, but really heaviest in the DAX that first year. Dow and DAX. I started out in the Dow, and then I quickly switched to the DAX. These are actual results. These are verifiable with my statements. This is my first year. My first year of performance. Actually, this is about 3 months or 4 months after I switched to trading futures. And when I saw that I wasn't making progress and just getting killed every day for 4 months, I started to create the sheet to keep me accountable. I just started to make about $100 to $200 a day, fairly consistently a few days before this, and I decided to just create this. And what this tracks is how I'm performing on each product. So I have a separate sheet down here for each product that has my my P&L, converts it to dollars, and then what I do here is I accumulate it, and I look at the average return per contract, average day, and I look at my cumulative P&L. And this is just looking at the dollar side, right? This is at a minimum you should be doing this. This is just basic accounting. And you can see I run through, and the way results show up is green, 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 red, green, green, red, and the goal is to keep these red days, these losing days. These are all net of costs, by the way. This is all net of costs. You can see the number of round turns I've done up to that point. For example, in this 1 week early on, I did 1,512 round turns. These are not sides. Some of these are sides actually. I started out with sides and I switched to round turns. Actually, no, these are completely round turns because I always opened and closed. So this is all round turns. So if it's an odd number, it's an odd round turn. It's not an open trade. If this was sides, I would have an open position by the end of the day, and I never went home with an open position. So different time in the markets, different era, but you could see that, you know, I was fairly solid and fairly consistent, and the numbers start to increase fairly quickly, right? So I'm starting to figure things out, and you see I go from a few hundred to 700 to having $1,000 day for the first time, falling back, having a bad day, making some back, having another bad day. So overall this week, I didn't do so great, $800. The next week I came back more focused, spent the entire weekend working on stuff, came back on Monday and had an even better day. Next day, always you'll notice after a big day, I have a really crappy or mediocre day, see this $4,000 for the first time. So you can see how this builds fairly quickly. Again, this is shortly after I started to make the turn. There's a new record right there. There's a new record right there. A new record is succeeded by a setback. I make some money back, then a little bit more setback, come back over the weekend on Monday, come back focused, have a good day, another $1,000 day, and so on. It's back and forth, and then I've had days or weeks. Each one of these dark lines outlines a week. I've had weeks where I didn't have a single down day. And I've actually had months, 3-4 months, where I didn't have a single down day. So that finishes off that year. And you can see the end of year P&L and the average I was getting per day and the average I was getting per contract. So this is really just a basic accounting of what's going on. So I wanted to show you that to explain that gains are generally nonlinear. It's unfair to use that sheet. I actually couldn't pull out of the archive. I need to download it from one of my other traders where you see something a little more typical, but I had already had some experience trading equities, and so my performance was not would not be typical of a trader who's just starting out. Also, I've always traded in a professional environment. It's a little bit different, and the accountability level is much higher, and that's really the main difference between trading on your own and trading in a professional environment or a group of some sort. And that's the main objective of this talk. So let's talk about accountability real quick. Without accountability, there is no progress. I believe that very strongly. You're not going to make the kind of progress that you want to make if you're not holding yourself accountable. Now, you can hold yourself accountable to yourself, or you can, even better, hold yourself accountable to someone else, someone that you respect. So what is accountability? It's an actionable way to remain true to yourself, right? So it's about taking steps to make sure that you're not deceiving yourself. As human beings, we tend to tell ourselves things that may not be true. It's a survival mechanism. It's a psychological coping mechanism. I've heard things, I've said things when I was learning that didn't seem all that stupid to me at the time, but are absolutely dumb. Things like, oh yeah, I didn't mean to take that short. My elbow hit the mouse and I got short and I watched it for 3 hours. Like not holding myself accountable to something that I did that was contrary to the instructions I had for the trading day. So being accountable is just laying out whatever it is you need to do to make yourself come back to reality and face the reality of what's going on. So it keeps you honest. We'll talk about that in a second. And it keeps you focused on short-term goals and answerable to the results, right? So if you have a bad week, You might get upset for a little bit. You might go have a drink, watch a movie, whatever, and you'll get over it. Then you'll come back next week, and you're not really feeling the brunt of what has happened, the pain of what has happened. However, if you are accountable to someone else, or if you monitor things using a sheet like this, when you come back the next day, you'll be able to see that it's nice and red there, some big losses, and those losses really impact your average. They have a tremendous effect on your average because they're negative numbers, and you want a positive average. So it keeps you in line. If you don't track those, or if you're not answerable to someone else, then it's easy for us to forget and move on. And so accountability is something that we kind of have to make an effort to do, and most people don't have the discipline to do that. Did you do what you planned? Did you execute when things felt off? That's accountability. You set out your plan for the day, and then the market opens, and all of a sudden you're doing the opposite of what you said. You think the market is going to drop early, find buyers, and then bounce up and push all-time highs like it did today. That was my plan for today. Instead, you get long early, the market drops, you decide that it's weak, and then you just sell it and sell it and sell it into new all-time highs and keep selling it and selling it and selling it. So you did that. You did that. You close your platform, you go away, and you move on with your day. But if you have to sit down and explain to someone what you said you did and what you actually did, which was opposite that, you'll have to explain why you did it. You have to explain how you're going to prevent yourself from doing it in the future. So remaining accountable just prevents you from just derailing your progress. When you're derailing your progress, you're losing time, right? You just lose time, and you lose the gains that you've had so far as part of your effort on a day-to-day basis. So let's talk about losses for a minute. Again, accountability is all about being answerable to your execution, to your losses specifically. Coping with losses and some of the mind games you play, we all play actually, you will lose all the time. Like, just accept this. Like, just sit back and let yourself know and accept that you will lose all the time. If you watch this morning's Trader Bite on YouTube, youtube.com/FuturesTrader71, and look at today's, I went over what I did yesterday on my Bookmap platform and showed a trade that was executed poorly and resulted in a loss. If I show up every day and I only show the winning trades, and something's wrong, you're missing half the story, not helping you. So today I showed exactly what happened. I got long yesterday at 39, puked them out at I think 37 or something. The low was 36.50, and then I got long again. The market dropped some more, and I ended up adding to a position, a planned add, but it ended up going to much farther against me than I wanted it to. But I held on, and I said this morning that even though the trade ended up working out, it ended up paying the outcome. The grade on that trade is a D-. It's horrible because that kind of action will result eventually in a big loss. When I start to expand my loss, my planned risk, where does it stop? How far does the market need to go once it's breached the area that I said is my risk limit, and I hold on? What's my next risk limit? I don't know. Nobody knows, and so all of a sudden I'm taking something that something that I'm focused on eliminating, and I'm compounding it by holding on to a loss. So remember, losses happen all the time. They are normal. You cannot avoid them. Don't try to avoid losses by trying to filter out what you think are bad trades. In the end, you don't know if a trade is going to work or not. All you can do is stack the probabilities in your favor as much as possible, have it in your plan, and just follow it. The outcome's always 50-50, always. So what are the action items to prepare you for losses and for staying accountable? Define your loss limits. Make sure you have a limit, right? So define it. I have it on a big index card on my desk. 3 strikes, you're out. That's one rule I've had since 2001. 3 strikes, you're out. There's also a dollar limit. There's also a process for me to get to my dollar limit. I cut size and I cut size again and again and again. And if I hit my limit after cutting my size down to even a 1 lot, then I've done everything I can to mitigate the issue. It just wasn't my day. So make sure you have a plan for losses so that you can see yourself as being accountable by following that loss limit plan rather than taking a loss, getting emotional, blowing up, and then looking for ways to avoid accountability and explaining the loss away, which means that you'll probably repeat it. Define a method of slowing down when losses are consecutive, right? So you come in, you think the market, your plan is that the market is likely to skew a certain way. It doesn't work out. And you take a loss and then you're sitting there, it's just not clear to you, it looks noisy. Have a plan or a process in place to avoid yourself from just falsely identifying a next setup and a next setup and a next setup and unknowingly becoming emotional about the process. It's hard to make yourself accountable and to remain disciplined if emotions are involved. Okay, be prepared to take many breaks if you don't have clarity on the action that day. So I do this a lot. I come in and I see that this happened throughout December. I come in, I see that the market's just a rudderless raft that's just floating around. It's not really showing me what it wants to do. It's skewed to the upside, but I'm not able to see clearly what my edge is. I just take a break. You know, I drink a lot of green tea, so I go and refill my cup and just kind of walk slowly, take a breather. Sometimes I close my eyes at my desk, turn off the sound, close my eyes for 5 minutes, just have a small meditation or something to create space in between those losses. Multiple losing days, it's good to take time off. I know that most of us have this work ethic where we feel like if we don't show up for work, we've failed. Actually, breaks pay for themselves in trading. Take the day off. If I have 3 losing days in a row, I'm sitting out the 4th day. So I've always told my traders, focus on coming back after a break on being green. So if that's 1 trade or if it's 2 trades that day or how many ever trades, just make sure you finish the day green. So you're setting an upper limit temporarily so that you have a green day, an up day, a net up day, because it helps improve your psychology and improve your help you regain your focus by just finishing up green. On those days, you just take your most comfortable setups. You should know at some point from just sheer experience, you will know which trades are the most comfortable for you, which ones feel like your bread and butter, your just the trades that you will put on and have a lot of confidence in, even if they don't work. You'll start to vet those out. If you don't feel that, that's okay. It just means you're still struggling or working through your technical issues, but you want to get through that phase as quickly as possible. So what do you need to do to have an actionable foundation for making gains, right? So we talked about accountability. And again, accountability and performance are intertwined. That's why I'm talking a lot about losses and gains. I want to invite you to watch the mini series I did last year for Futures IO. Beginning of the year, I believe it was 4 or 5 webinars in this mini series, and I go through and I explain a lot of stuff that you'll end up, if you haven't done so already, you'll end up figuring out that the game is not on the technical side. Many of you, as I've said, many of you are able to perform well on a simulator, but then you go live and things implode. That tells you it's not a technical issue. It's more of how you're approaching the market, how you're seeing the market, and your mental game. That's where your focus should be. Just check that out on Futures.io. It's free. It's on their YouTube channel. Just look up FuturesTrader71 in Futures.io's YouTube channel. You'll find it. Just create a clear process on the open, right? So on a daily basis, I do this Trader Bite. You'll see it on my Twitter feed at FuturesTrader71 on Twitter. You'll see it on my Twitter feed at about 8:45 or so in the morning. You'll see a link to the Trader Bite. And during this process, I've been doing these for about 3 years. There are probably over 1,000 videos from every day done live. And the purpose of this is to help you create a process. So people have been watching these a long time, and many have followed them since day one. You see that the process doesn't change over the years, right? So you add a few things, you take a few things out, but it's still the same process. We're reviewing what the market did, what we expected the market to do. You know, we read it, we put it into context, we review it, we look at what could impact the day, we create a plan, we execute the trade, and then we manage it. Okay, so that's your process. And throughout those, at each step, there's accountability there. You have to be accountable for, that's how you create the accountability. You create the plan to which you're holding yourself accountable when the day starts. One of the biggest things you could do is to find a partner. Now, this is hard to do in a world that is online, and you might see people every day on Twitter or on Futures.io and the forums or whatever, but you can never really connect. You never really make that connection. But if you can find someone who trades not the same product, but has the same view on the market, so they can understand how you're approaching the market and you can understand how they're approaching the market. The best thing you could do there is to set up a 15-minute daily summary. So we do this in prop, right? When a trader is going through the paces and their training to become a consistent trader, we go through a 15-minute daily summary. It lasts more than 15 minutes generally, but because there are a lot of things to share, but it only needs to be 15 minutes, and it's a 15-minute Skype call or Hangouts call or phone call or whatever, where you just go over what you set out to do, what you did, and the results. And then your partner does the same thing. Here's what I set out to do. I'm in crude. I expected it to go higher today. My plan was to look for areas of support between here and here, and then if I did execute, I would get out here. And here's what actually happened. The market did this, and these are the positions that I took. I'm down for the day, but I feel good about today because I ended up following my plan. My timing was off, so I need to work on that. Okay. For those of you who don't have a partner, I'm creating this community called Convergent Trading that's going to launch at the end of this month, something I've been working on for a bit here, where it's really just for serious traders. And one of the key items that I want to create is accountability, to partner people up, to create a place for people to get together and talk about their performance and find like-minded traders that they can create a buddy or partner system with for accountability. So we'll connect you with someone with their permission, and then you can just you can be accountable to each other, right? We want traders to be independent. It's not a mentoring community or anything like that. It's just really a place for serious people to get serious about trading. Keep a detailed summary of your performance. You saw the spreadsheet that I showed you. Make sure you keep a detailed summary of your performance, right? I advanced quite a bit from that as part of my training. I ended up creating this thing called the Trade Analyzer, and it used to be just a spreadsheet. Now it's a full-on cloud-based platform. I'm going to show you what this looks like for this live account. This is a live trading account. This is a customer, a trader at Stage 5 Trading, and I'm looking at their account here. Look at this guy's performance. The performance here is shown in dollars. It includes a $3 per side commission, right? Just to include costs in here so that it's realistic. And you can see that from January 1, 2017 till this point, overall, not so hot, right? They've traded 3,347 sides, and they're down $694.50. They're on the right side of the market. Their percent long is 73%. They're more comfortable on the long side. Their win percent is 55 versus 44.9. They take their scale out a good 3/4 of the time. They get a good scale out, but overall the expectancy doesn't look so good. They're down. We expect them to be down 21 cents per trade overall. So we take the aggregate of all the contracts they've traded, a lot of ES and some NQ and Russell. So this is mainly an index trader. They're not doing so well from the beginning of the year. But look at what happens as this person hones in on their performance and they get a market. Let's do it from the start of October. And they get a market that gives them opportunities, right? So from the beginning of October onwards, we get a little more movement, volatility. And so all of a sudden, look at the performance. They went from being down, which is the good, 3/4 or 2/3 of the year, they were down to all of a sudden they're up 26 grand net of costs. This is actual performance. Again, past performance is not indicative future results. Net of costs, they're up $26,000 from being down that much, right? So about 2,000 contracts, 2,200 contracts were traded that resulted in an overall loss, but the last 1,100 contracts from October till January ended up showing a positive return in dollars. And you can see that this guy's expectancy has a pretty good trajectory. Remember, their expectancy was negative 21 cents per trade, 21 cents per trade to a positive $23 per trade. So they're getting 2 ticks per trade, and those 2 ticks result in $26,000 in gains. Again, still on the right side of the market. Did their win rate go crazy? Did it get much, much better? No, it didn't. It went from 55% to about 56.81%, not about, but exactly. They're getting better scale outs. They went from 75% of their trades getting a scale out to 81%. They're just holding on to their wins a lot better. So that's the error, or that's the process that they worked on and ended up being accountable for and improving on, and therefore their results improved, right? So you want to focus on the process, not the results alone. Okay, so that's keeping the detailed summary and knowing what your averages are, setting a projection. One thing I didn't show you in the spreadsheet. So this accounts for every day, how many contracts I traded and the P&L and stuff. But I'm also looking at my averages, right? So these are my averages over that 1 year period. This is how my average was per day. So this is my average moving, and I put a regression line on here to see if it's upward sloping or if it's downward sloping. But this is what I'm averaging per day. So I'm keeping track of averages, and I'm also keeping track of a monthly average per day, an accumulative P&L, and I'm looking at how that P&L is moving over time, okay? So every month I go through and I look at how's my performance this month so that I can identify which periods, which months. I can also go back and look at a chart to see what areas, what times give me the better performance. And then this is my P&L equity curve, my actual equity curve versus projection. So this line here is projection. You can see that it says total P&L projection. So I'm projecting on average what I'm going to do for the year. and then this is my actual P&L line, and this is just a trend line, a best fit trend line on that P&L. And as long as my average is above my trend line is above my projection, I'm doing okay. So this year went according to plan. They don't always go according to plan, but getting into that level of detail is really important, because then you're really focusing on little improvements. It helps you filter out the noisy trades, the crappy trades. I want to conclude here by saying finding a partner is a big part of this. Also understanding the aspect of trying not to avoid losses. Your goal is not to avoid losses. Your goal is to focus on taking good trades. I want to invite you, with FuturesIO's permission, to sign up. Go to convergenttrading.com, sign up to get updates if you're interested. If you have questions for me, you can always shoot them over at FuturesTrader71.com/contact, and you can leave me a question there. Okay, so that was a lot to cover real quick, but I think there's a lot that you can take out of this. Is there anything that I need to address, Terry?
I don't think so. I'm just waiting to see if there's any questions at the moment.
I know it's a lot of stuff to digest, but it's worth maybe a rewatch.
Can you share the Excel sheet template that you used?
I cannot. It's not very useful anymore. I mean, this is just an old school way of doing things. It's not that complicated, really. It's you put in the date, you put in your P&L at the end of the day, you put in your costs. I would track things like my commissions and things like that. So if you look at the DAX sheet. So this is the DAX sheet. How many points I made that day? Each point's worth 25 euros. I'm converting the euros. I have the number of round turns, and I figure out the gross, my P&L, my commissions. I'm keeping track of my costs, and so on. And then that ends up going into this sheet right here. So the bottom line is you want to know what you're averaging per contract and what your overall P&L is versus the projected P&L. So you need to create some sort of a goal for yourself and be modest, right? So it's an average. So if you tell yourself on average, I'd like to walk away with $50 a day. There are 252 trading days a year. That's a pretty modest average, and your goal is to do whatever it takes to stay above that. And in order to stay above that, you are forced to be accountable and to be picky about what you do. So you're not doing impulsive trades because you know that a $400 loss is going to really drag down an average that is set at $50 positive per day. That's going to impact 8 days of trading. So you start to not get hasty. That's what happened to me. I stopped getting impulsive because I could see the ridiculous impact that these crappy trades had on my trading account. Whereas if you just look at your statement at the end of the month and you're monitoring it, by the end of the month, I don't live or die by my P&L every day, but I do put it in there. I'm conscious of it, and I know whether I'm moving forward or moving backwards, or I'm going into a rough patch or what. This is important to keep your mind focused on what's important. So the goal is not to sit here and count your beans every day. The goal is to help you understand what the impact is for having a bad day, as opposed to just seeing $2,000 come out of your account at the end of the month because you took some bad trades. You're looking day in and day out at the impact of every single trade. It's also a good way to check to make sure that your account is being properly managed by a clearing firm and things like that. But I'm not able to share that spreadsheet, but it's too easy to create. I mean, really, you're just looking at the date, the P&L, how much you traded, your gross P&L, and all of your costs. Include all of your costs, I have a daily cost in here. So there's my fixed costs on a daily basis, $76.50. That included TT, XTrader, CQG, phone line, Bloomberg, and so on, shared among traders. That's my daily cost, $76.50, including the rent for the office at the Board of Trade and things like that on a daily basis for myself. So I'm running this as if I'm a CFO for my trading firm, and that's really the purpose here. It just keeps your mind in an accountable frame of mind.
Okay. When you showed your performance at the beginning of the webinar, you highlighted some losing days immediately following winning days. From observing this, do you recommend adding stipulations in the trading plan to lower size or take time off after a big winning streak, or do you consider this a fallacy?
No, I don't stop after. See, I've tried that. I believe that nature operates in sequences, and when things are good, I want to keep pressing. And you probably saw that in the spreadsheet. I'll take 200 and try to get 400 the next day and go for 800. And by the way, I don't track my P&L in dollars. I don't track my P&L while I trade at all. I'm focused on the performance, but I look at my P&L twice a day at lunch. When I pause for lunch, when the busy part of the session is done, and then I look at my P&L at the end of the day to close out the day. I spend about an hour after trading. And so if you're getting good results, you want to press that edge. You have a market that is in a good cycle for your way of trading. You don't want to step back. I don't believe in the reverse martingale and martingaling stuff. It's just, I don't believe in that. I believe every trade is unique. And so you got to press your edge. However, if you have a big blow up day, you need to take the next day off. The impact of that on your ability to see the market is much more than you can fathom. It is just impossible for your mind to come in and not have emotions involved after a big losing day. You hit your loss limit for the day, for example. It is important to come in and spend the day watching and just observing, still doing your morning plan, still doing your run for the day, still doing your notes. One of the things I didn't show you is the hang on, where'd it go? Is the pre-market notes. Here it is. I didn't show this, but many of you have seen this. This is for my Trader Bite. This is the pre-market run. Okay, so I'm looking at what's the news, what are we expecting, what are the key elements that happened overnight and yesterday, and then come up with a plan for the day. Expect this type of market, look to lean against this, look to get long here, look to scale out here. This is really important. I used to do it in Evernote. Okay, I still do it electronically, and the reason I do it in Evernote, which is just an online notebook app, the reason I do it in Evernote is because it makes it easy for me to search for things when I'm reviewing. But this is something you want to do even on days when you are when you're taking a break because you just had a bad day. You're still coming in and doing the work, right? So you're not, just because you had a bad day doesn't mean that you just stop. You just stop trading. You just go and play video games or whatever. You need to come in. You need to follow the same process, and just understand that you may not be in the right frame of mind to objectively assess the market. Now, if you believe that you are, and you're calm, especially if you meditate or something, you can trade. But it's if you had a devastating loss and it kind of had an emotional impact on you, something that caused you to be angry, it's good to take a break. There are an infinite number of days that we can trade. There's a limited number of days that we live to trade, but missing one day isn't going to impact things so badly that you need to trade every single day. It's not necessary to do that. So on the upside, I'll always press. On the downside, I will take a break. Once I hit my loss limit, I tend to come in shy the next day, but still doing the same amount of work to prepare.
Okay, would you mind showing the detail that you keep on each trade?
The detail, is that the detail that I showed in the summary?
I'm thinking like, I guess, information about each individual trade that you record daily.
Oh, as in a journal,
Yes.
like a journal entry?
Yes, I think so.
I don't have that up. I'd have to dig that up. I don't have that up, but it's the same as the Evernote journal. So I use the trade analyzer partially to record the grade for the trade, but I have what looks like a grid system or a spreadsheet in Evernote, and I just put down the fill time and the fill, and I just put a quick note on how things worked out. If I didn't have committed an error or something, I'll note that. I don't keep that as closely as I used to. I generally fall back on that when I've run into a rough patch and need to go back to the basics, but in general, I don't need to journal my trades as closely as I used to. But I do use this. I grade the trades. I do have error codes for each trade, and that goes into the database and gets pulled in with every trade. And if I don't use this because I don't have my setups defined clearly enough, I don't have a limited number of setups defined clearly enough to assign a code to each setup. But I know many people use this and they come back and they look at their error codes and they determine what their errors cost and things like that, which I've talked about in that mini series.
Okay. What do you think of services like TraderView.com that allow you to import your trades and generate all the stats and reports?
I haven't used it. I've got this pulls the data in real time. So there's nothing, I don't need to input anything. It's I think TradingView, somebody passed that on to me a while back when I released the trade analyzer to the public. Said, hey, this looks similar, but this has a lot more detail. But it's also, the other thing is it's in real time. You know, it's cloud-based, it's in real time. There's a real-time component to this as well. This is able to pull in real-time positions and give you statistics live while the trade is going on. And this is on and running on a cloud server 24/7. There's nothing you need to do. Now, I'm not here to plug this product. I'm here to plug the fact that you need to keep track of your performance. But the benefit of this is that it's cloud-based and it's running 24/7. There's no need to turn it on or off. It's constantly pulling each and every trade and computing the MFE, MAE on each trade down to the tick in real time. So that's what's different. I'm not sure, I haven't used the TraderView product. I'm familiar with it, but I can't say I've used it a lot, and actually I've never used it, but I see no reason to move away from what I'm currently using.
Okay. Do you punish yourself for not following your rules? Is the punishment to not trade for a day, etc.? Breaking a rule without consequences doesn't cultivate the right mindset.
So that is part of the accountability process. So that goes back to purpose, right? So we're not children. Now I'll tell you this, for a trader, an employee, if they have a loss limit and they exceed it and they hold on to a trade past their loss limit to try to hope and pray that it comes back, there is a rule that they agree to where they have to sit out. They have to come in the next day and just watch the market. Okay, that's forced. So they're locked out of their account's set to liquidate only. So I did that to my traders, but that's because they were generally guys that I pulled right out of college, and generally much more aggressive and have a tendency to kind of fudge things. I don't do that to myself. I know what my purpose is, and I know that when I'm cheating myself. I'm just hurting myself anyway. I mean, the fact that I'm not following what I said I'll do, the fact that I've lost my cool is punishment enough for me. I mean, I don't let that go very lightly. So I don't do anything extraneous to punish myself. A long time ago, I used to make a donation for any loss above and beyond my limits that I set. I would make a donation for half of that amount. So if I have a loss limit of $1,000 and I gave up $4,000 that day, I'm gonna donate $1,500 on top of the additional $3,000 that I lost. And I had a set of charities that I would do that to, and it just made it extra painful. And those are the times when I was setting big goals, right? So I was coming in and I'm looking for not just a couple $100 per day. I'm looking for a few thousand, $8,000-9,000 for the day. So I wanted to make it really painful to get it to violate my limits by being too aggressive and too complacent with my risk. I don't see the point to doing that. If you define a purpose and you make yourself accountable, it's painful enough. Just remember, you don't recover today. You can never get today back. I didn't appreciate that until I got older. But once today is over, it's over. It's a day that you could have done something with. It's a day of your life that you're never getting back. So coming in and messing around and not fulfilling a purpose is just a shame, because you just never get this day back.
Okay, perfect. Thank you. There's a couple questions on what happened with stage 5.
What happened? I'm not sure what that means. It's there. It's growing. It's normal.
All right.
Nothing happened.
And what is the requirements for joining the convergence?
Nothing. I mean, there are multiple tiers. I'll talk about this more as it gets close to launch. I don't want to use the space to plug it, but the purpose there is to really create a community structure that's open to all. So it's a subscription-based service. There are multiple tiers. The first phase of the launch is going to be the community structure. So it's a chat room with closed discussion groups and for members only. And it's really me taking the effort that I make publicly, taking it and focusing on those who want to be a part of the community. So that's what it's for. Later on, after that gets launched, I'm taking the emerging prop trader, professional trader program that I'm using to train prop traders. I'm taking that and I'm putting it together so that it is something that is accessible to the public. I'm not sure what the cost structure will be, but the goal is to make it so that it's not ridiculously cost prohibitive. But it's the same program that I would put a prop trader through in order to get backed as part of their backing. And so it's just being open to the public. That's all. And it's just piecemeal and modules that make it not so difficult to pay for, but it's a long-term kind of structure and course. I still don't have that all figured out, but I have an outline for the strategy, but it's a work in progress, and that's really my full-time focus now. That stage 5 is running on its own, and it's growing on its own. It's well managed and well structured. I've moved to focusing my attention on prop trading full-time.
Okay, perfect. Thank you. How do you prevent all of the accountability from causing fear to enter a trade?
So that's a kind of a compound issue. The accountability part addresses the games that we play to explain away our shortcomings. So think of things like quitting drinking, or quitting smoking. Okay, so if you're someone who really enjoys to eat or drink a lot of alcohol or smoke, it's something that you really enjoy. It's an integral part of your habit structure. It's part of who you are, and it's something that you seek to change. And part of the process of changing it is to just stop. However, as you have that strong desire to stop and motivation and so on, over time what happens is that gets degraded and you start to explain away why, you know, a shot of tequila is okay because this is this guy's birthday party. Next thing you know, you're laying in a gutter somewhere. Or, you know, just having a smoke when you're out with your buddies, just one, turns into a 2-pack a day habit that resumes. Accountability is what AA uses as a core part of their program, where you need to come back. You need to identify the issue that you have. You need to own it, and you need to publicly address it. That's really the accountability part. And as long as you're doing that, as long as you are being accountable and honest with what you're doing, the fear part is just a function of confidence, right? So as you start to see that your process is working, that you're not incredibly averse to taking losses, that losses do not cause like a short circuit in your behavior, that it just becomes part of who you are on a day-to-day basis, the fear goes away. It's a lot like you know, somebody who has a fear of flying but now is a multinational sales representative for a global company. You know, your first few flights are going to be terrifying, but you see that you take off, you enjoy your flight, you land, and you move on, and it becomes part of everyday living. But if you make excuses for making that flight, if you make excuses for getting off the flight because you're not accountable, you're working for yourself, there's no one to hold you to the fact that you're not making these sales meetings, then you would never have progress. So the fear just goes away as part of practice. The more trades you have under your belt, the more you're likely to hang on to the progress that you're making. But none of that matters if you're not holding yourself accountable to your failures. There's just no point to doing any of this if you're not going to hold yourself, you know, to the plan that you said you were going to be executing on. Does that make sense? Those are intertwined.
Okay, perfect. Well, we're at about the hour, so that was a great final question. And thank you for the webinar today, the information, and for spending some time with us this evening.
Thanks for having me. Have a great one, everybody. Take care.